Good evening, traders. Chris Buss here with Traders Profit Compass with a closing market wrap for Monday, May 9th. It is 6:45 in the evening as I'm starting the video. And I just got the updates on stock charts on our oscillators and everything. So I wanted to give you a heads up on where we're at on those and kind of give you some things to think about for tomorrow. So here we are on the well, let's start on the NASDAQ. I got it right here. NASDAQ oscillator, NAMO. We tagged 60, negative 60 on the oscillator. So that's, the rubber band is definitely stretched. Definitely cautionary for shorts. Doesn't mean that we can't make a move lower. But as we, push lower from here, the rubber band gets even more stretched. And this is not a place to be, oh my God, time to get short. Now is the time to be cautionary with the puts that you have. And if you didn't start scaling out today, and we're down tomorrow, definitely be scaling out, I would say. But let's go through the whole analysis. I just want to show you the oscillators as it, everything has to be taken holistically. It's not one thing. I do place a lot of faith and emphasis on these oscillators because as you can see, you're on these oscillators stand undefeated. You may not time it down to the day, but when you get the rubber band stretched, it is going to go the other way. It's a matter of finessing it and just making sure you're not loaded to the gills with calls when it's stretched to the upside or puts when it's stretched to the downside. So, we're definitely at a important point here. We're at minus 65 on the NYSE. But I wanted to show you something in the VIX that I've been watching, and I told you I've been keeping the VIX on the matrix on my trading matrix during the day and watching it. And I even sent out a note today. If you saw a big VIX spike in conjunction with a waterfall sell-off, that would be a time to, that's it kind of a thing. That capitulation move. Let's go back in time and look at the characteristics of the VIX when we've had these big sell-offs. Going back to the beginning of 2018, hard to believe that's like 4.5 years ago. It seems like yesterday in a lot of respects. Early in the year, if you remember, we had that Volmageddon when everybody was shorting the VIX, blah, 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 and then they took it the other way. There was let's just use round numbers here, a 500% moonshot on the VIX. And that was that big VIX spike and the massive 2 or 3 week rug pull. This is a weekly chart. So we had a 2 or 3 week rug pull on SPY that really left a mark on the charts. And then it recovered. We went all through a bull market cycle in 2018. And then in Q4 of 2018 was, the Powell, we're on autopilot, and we went down 25% in 3 months, and we got a 225% VIX moonshot. You remember this corresponded to I think it was Christmas Eve or the week between Christmas and New Year's, and then you got the Powell pivot. And then that crashed the VIX, and we went on to another, a reversal and a bull market. and that we went through that in all of 2019, and then we came into the COVID blow up, and we did a 600% moonshot, right? And so then we started the Fed intervention, and we've had a 2 year bull market. And in these VIX episodes where VIX would pop up to the low 40s, really, if you go back in time, and I didn't do this exactly, but I think you'll find that these pop-up episodes corresponded to pullbacks to the 50, by the dip regime, where you get that pullback, the VIX would pop, everybody would buy it, and then it would retreat again. And then once the bull market was really ripping, these pullbacks to the 50 had less and less effect on the VIX. The pops were smaller. So now here we are in 2022, and you can see that this 37.5 has capped the VIX. This was our February low, right in here, got up to 37.5, and of course they bounced it. And then we had the March low, got like right into the same level. This was the big rally that we just came out of, that 15% rally off of that March low. And then we've been going downward, ever since that peak. I think 4 or 5 weeks in a row of consecutive down weeks. And the VIX has only doubled. So the question is, if the bottom is in and they rally it from here, then the VIX will fall. That makes sense. But the point I'm trying to make is, on all these other occasions, you get a VIX spike and somewhat of a waterfall event. That is the capitulation. That is get me out at any price kind of a behavior. And I think that's what we're in for, to put it bluntly. I think there's going to be a moment. I don't know if it's going to be tonight or, a week from now, but I don't think you can put in a 20% bottom and just have the VIX be benign. There's no fear out there right now. When you look at the price action on a 5-minute chart, there, these little tiny bars, just a steady drumbeat of selling, but no real fear. And until we get that moment, I think there's more downside to come, and I think it's got to be soon, because we have the oscillators at -60, and of course my thesis can be foiled as of tomorrow morning if we gap higher by 4%, but we can certainly go to like -90 in one shot, and have that accompanied by a VIX moonshot to 50, 55, 60, whatever it is. All I'm saying is, I don't think you can have a big low at 37.5 unless we're still in a bull market and this is just a dip like any other dip. I think it's worse than that. I think something more severe is on the way. So let's look at some charts here to go along with that, knowing where the oscillators are at, and where the, looking back at the VIX behavior, how it's acting and its, absolute level right now. Here's Bitcoin. It was down 8% today. This is the weekly chart. You can see here we've been in this trading range. I mean, let's just use round numbers. 60,000 to 35,000. So that's $25,000 wide range. And we broke it today. And you can look back on the chart and say, yeah, but there were some lows back here at 30,000. That's true. But what I'm saying is we are right here on a trend line off these 2019 lows that comes in here, gets quite a few touches in here. I took out this COVID low. I mean, it's got to hold right here. I mean, there is no more wiggle room. If I brought this down here to 30,000, you can see, both would intersect there. But at any rate, just using our technical analysis, once you break a trading range, your target's the width of the range, right? So if this trend line breaks here, you definitely have to say that the range from 60,000 to 30,000 is broken, and then that puts you like way down in here, 12.5, 5,000, pick a number. But also note momentum coming way out and in bearish regime, and RSI coming way down, and it's been in its bearish regime for all of 2022. So I don't really see, count the weeks, 1, 2, 3, 4, 5, 6, 7, 8 or 9 consecutive down weeks. I don't really see anybody, stepping in for any kind of big rally. We could have a kickback rally to 35,000. I mean, that's wouldn't be anything out of the ordinary to revisit the scene of the crime, then break down. But liquidity's coming out of the system. Momentum is definitely out of the system. And this thing is ripe for, some type of liquidation type of a move. And that would coincide with that thesis of a liquidation type move in equities as well. I mean, they're following each other down. Let's look at SPY. Here's the weekly chart. And what I wanted to point out is we lost this. Remember, Friday, they closed it right at 410. And that's like market behavior Friday afternoon. Don't make it obvious that it's going lower. Park it at a place where, bulls and bears alike get to chew their fingernails through Mother's Day weekend, have everybody on the edge of their seat for futures on Sunday night, and, God help you if you're on the wrong side, right? Whether a bull or a bear, something's going to happen. And so today, it wasn't as dramatic as it could have been. I mean, we gapped down a couple of percent, but then there was steady selling. And the thing that I wanted to point out here is this. We're in a void now, right? We lost this big shelf of support, and now we're in a void, and the next significant volume over price bar doesn't come in until 375. Now, I'm not saying that it's going to do that this week. All I'm saying is that we're in a void, and if you look at this area here, right at the top of this little shelf, or otherwise on the top of this bar, that comes in about 385. That's certainly within striking distance of, some kind of a power move through the end of this week. So I think the most important thing, or a place to look at on your charts, is if the bulls can step in here, rally it, and recapture the Friday close, that would be, on the face of it, bullish. You would see a bounce in the oscillators, and you would see VIX come off. So maybe that would be a short-term bottom, especially if they can, follow through on that. But we parked at 398, just below 400, I think. And just, this is all anecdotal stuff. It's not, scientific or anything like that. I've been listening. I usually don't, but I've been listening to, CNBC throughout the day, a little bit of Bloomberg, a little bit of scanning on FinTwit, Twitter. A lot more people talking about Turnaround Tuesday, and this is a great place to buy, and all these analysts coming on that the market represents a good value here. I mean, just probably only 1 in 10 of the analysts that I've heard, over the last, taking Friday and today together, are being real cautionary. Most of them are still beating the bullish drum, and FinTwit as well. Turnaround Tuesday, the bottom's in. I didn't see anything today that would lead me to believe that. Let's look at the Qs. We lost that 310 area. That was the big shelf of support on the weekly. And again, we're in a void. And this 50% retracement is down here at 285. And given we were down 12 today on the Qs, 12 from 297 is 285. So, I mean, another day like today, and like you're almost there. So, who's to say, today was the bottom? And the thing is, it's not just the levels, it's the way it happens. If there was, if we gapped down overnight to 283, 285, a big 4% gap, something like that, and then you get that hammer bar, a spike low, a spike in the VIX, and then you see that hammer form on an hourly chart, that's your signal. That's when you want to cover. Not this, open down 1% and then they, just kind of sell all day and the VIX doesn't really do anything. There's no climactic event. I think that's what we're looking for. It'll remain to be seen if we get that. But also keep in mind that the measured move target off of this structure points down to the same level. So we've got a void in the chart. We've got the 50% fib down at 283, and we've got the measured move coming in at 285. And I also wanted to show you on the momentum, this type move right here is like bear market behavior when you get the PPO rolls over. It looks like it's going to curl up and make a bull cross, and then it rolls right back over again. That's what you see in a bear market, and it's exactly the opposite of what you see in a bull market. When you think you're going to get this bear cross, and then they might touch or they might get close, but then they reverse and go higher. So just remember that in bull markets, bear market setup or bearish setups fail, and in bear markets, bullish setups fail. So when you see things that should be bullish fail, that's a tip-off that you're not in a bull market anymore. That's bear market behavior. So let's move on to IWM. Here we are in the weekly, and we are, ever since we lost that this trading range here, it's been straight down, and we're in a big void that is really open all the way to the pre-COVID high. I think that's where it's going at 165. If you look at the daily, it lines up really well. I've got a gap that goes all the way back to that time period, to the 2020 breakout, and there was a gap. And this might be off a little bit. It was hard to get a read on that. I hadn't had it marked originally. I got it at between 167.62 and 161. That aligns pretty well with that pre-COVID high of 165. We may come down here. Like this would be another setup that I would look for tomorrow if there's some kind of a gap down. Gap way down, either touch the top of the gap that they buy up immediately, or a big look down into this gap that they immediately pop right out of it. That would be like a climax selling event in my book. So keep that in mind tomorrow. I'm not going to get into all the FANG stuff and all that stuff. We'll do that in the morning. But I also want to reiterate, tomorrow when you're kind of setting up your plan, and we'll fine tune these levels tomorrow, based on the overnight futures. It's going to, if we gap up, 4%, you can just say, that video Chris did last night, he was obviously wrong. And I would be on a big gap up tomorrow. But if we gap down, I sent you a little note on put selling strategies. If you got that big whoosh down where, the VIX popped up to 47 or 50, you're going to have some great premium on puts. And what you can do is, if there's a stock you want to own, you sell your put at that high premium, and if they take it down, you'll be assigned, but you'll get to keep all that premium. Only do that on stocks you actually want to own, that you have, cash in your account to pay for, and you sell one put for every 100 shares that you want to buy. Now, for the rest of us that are not deep into owning common shares, what you can do at that high premium is you can sell some puts. Like when you get the whoosh down, you can sell some puts, say 10% out of the money at $5 or $10 wide. You would, let's just say, you would sell a 50 strike, and then you'd buy, say, a 45 strike. So that would be your 50-45 put spread, and you sell that. You'll get to keep that premium immediately, and if you've timed it right, and then stocks go higher, the stock goes higher from there, two things are going to happen. The volatility is going to collapse. It's going to go from 55 down to 40, down to 30, and that's going to eat up the value of those put spreads. And of course, the price will move away from your put spread, so you'll be winning on two fronts. And in a lot of respects, I think that is an easier trade than, okay, I think it's going to bounce. Well, how far is it going to bounce? And where should I put my strikes? And oh my God, these calls are really expensive because the VIX is at 55 or whatever it is. They're going to be expensive. So you got that working against you, because then as the stock rises, the VIX is falling, and hence the value of your calls in terms of volatility is decreasing. Now, if the stocks do a moonshot, you'll overcome that. All I'm saying is it's a harder trade than selling puts or put spreads in a lot of respects. So I think you'll know it when you see it, whenever it may occur. You'll get, that capitulation VIX moonshot along with a dramatic move in the indexes and whatever stocks you're trading, and then you'll see that hammer candle formation. And given what I see, the behavior of the VIX, that we're not at minus 90, we're minus 60. Nobody seems to be scared about anything. I don't see that bottom yet. So we'll go over the details tomorrow morning on fine-tuning the levels, and the overnight futures will help color our analysis in the morning before the bell, and then we can fine-tune our strategy. So I hope this summary helped, and hope you're doing well, and we will talk to you in the morning. Have a good night. This has been Chris Buss with Traders Profit Compass. Talk to you next time.